Tomorrow is the make or break moment for our markets and for Tesla stock. That's because tomorrow morning you will get the Fed's preferred measure of inflation. And it's looking rough. We are expecting core PCE price index month over month to have accelerated dramatically on a month over month basis to 0.4%. Last month you came in at 0.2%. So for the month of January, we have pretty high expectations that inflation is on the wrong trajectory. That does set us up for potentially a better than expected number, even if we did see an acceleration from December to January, let's say of 0.3%, that would still be higher than the last number that we got of 0.2%, but not as high as expectations. That could be a bullish outcome for tomorrow for equities. To the contrary, if we come in 0.4%, that's a problem. And I would expect a sell-off in markets. If we come in higher than that, then you have an even bigger problem. Then you're looking at fears of inflation actually reaccelerating here, maybe not just the seasonal adjustments that you tend to get to start a new year. The markets lately have basically gone straight upwards. There's been very little downside volatility, and even what's crazy is 2020 and 2022, you had more volatility than you do now. I mean, as rates have went up a lot, as there is really uncertainty around the inflation outlook, the economic outlook going ahead, you've really just seen a lack of volatility recently in our markets, and we could be overdue for a corrective move lower. But again, good news is our expectations are way up here. The expectation is inflation really accelerated last month. If it just mildly accelerated, that would be good news. These high expectations come from CPI coming in hotter than expected last month and PPI coming in hotter than expected. Coming tomorrow morning, we will also get personal income month over month, and that could be a pretty important number as well. We are expecting that to rise from last month's number of 0.3% month over month to 0.4% month over month. So when you're looking at these month over month numbers, 0.4% is quite a bit compared to the last month's number of 0.3%. Now, this on a small scale could be some of that wage price inflation, better known as the wage price spiral. Although that is not having a huge effect likely on inflation right now, it could be something that is just here for the intermediate period of time going ahead. And that's not exactly going to be great, so we need to see what the data says tomorrow. Personal spending month over month will also come out tomorrow. The expectation is 0.2%. month over month. Last month was 0.7%. Now, when you're thinking about last month being 0.7%, if you're adding another 0.2% comparing to that number last month, you're still seeing some pretty dang robust personal spending numbers. So you're expecting some pretty good data there. We are also going to get PC price index month over month and year over year. This is your headline. We're expecting an acceleration month over month from 0.2 to 0.3%, but year over year to fall from 2.6 to 2.4%. A lot of the time when the Fed references, like we'll talk about here in just a moment, inflation getting down to 2%, a lot of the time they're talking about your headline and your year over year core numbers. Now, core PCE year over year is expected to come in at 2.8%. Last month, you were at 2.9%. So you're expected to still make progress on a year over year basis, but those comps will get more difficult if you do start to see month over month PCE on your core basis start to rise. The worst possible scenario we could see is core month over month accelerate and just overall headline year over year not fall as much as we're expecting, stay the same, or actually rise. At 9:45 a.m. tomorrow, we are going to get the Chicago PMI, expecting that to come in at 48. So 2 points better than last month's number of 46. So that would be good. Pending home sales month over month and year over year will be coming out at 10 o'clock in the morning as well. And expecting some deceleration there across the board, especially pending home sales month over month. Expected to fall from 8.3% last month to 1%. For the month of January. Now you are going to get Fed Bostic that will speak at 10:50 a.m. and then Fed Goolsbee at 11 a.m. And then beyond that, you're going to get Fed Williams at 8:10 p.m. tomorrow Eastern Standard Time, Fed Mester at 1:15 p.m., and then some data coming out from China around 8:30 to 8:45 p.m. tomorrow night. But really, if you want to boil this down, month over month core PCE. That's the number you really want to be watching. The year-over-year numbers, all of that is important as well. But for the kind of current trend in inflation, you want to watch that month-over-month core number. That's the number the Fed really cares about. If you come in at 0.4%, the expectation that the markets currently have, stocks probably sell off on that. Just because, I mean, stocks are still trading at almost all-time highs. And if you get that kind of bad number, 0.4% on a 12-month annualized basis is 4.8%, that in no way, shape, or form supports the Fed cutting rates at all. Like, you may not get a rate cut in 2024 if that number comes out. And I think that would start to spook the markets. If you come in 0.5, 0.6% or potentially higher, then you're looking at maybe a 2 to 3% declining day tomorrow. To the contrary, if we come in below expectations at 0.3% month over month, well, I'm sure you get maybe a 0.5%, 1% rally at least in the Russell 2000 as people are taking a, breath of fresh air, a sigh of relief, if you will, that inflation is not running away again. Just because that CPI and that PPI report were so strong over the last couple of weeks, some people are on the fence here that maybe PCE will come in really hot as well. It is also important to remember, this is the average chart of the S&P 500 in the fourth year of a new president, which is right now. You tend to end the year up about 12.2%, but if you are going to get a large or sizable pullback throughout this particular year, it tends to happen about right now, mid-February until the first half of April. That's where you tend to see most of the weakness, with markets that tend to bottom out towards the end of March and the beginning of April. So it is not uncommon to see some seasonal weakness, like right about now. Now, back to the PCE report we're going to get tomorrow. I found it over the years, a lot of the time, if we're going to get a really bad number for something, sometimes really good, but specifically a really bad number, the Fed likes to come out and kind of cushion the markets for that. Give the markets a little bit of a heads up, if you will, that we could get a bad number. Take a listen to what your Fed speaker said today. Fed Bostic said at 12:27 p.m. today, there is still work to do on inflation. Haven't declared victory. And just so you guys are aware, some people think it's not true, but literally Fed Jerome Powell confirmed it, that a lot of the time the Fed officials will get important data reports a day or two early. So the Fed likely already knows what the number is for tomorrow's PCE report. Fed Bostic goes on to say that he is comfortable being patient on policy. He also says it won't be a fast march to 2% inflation and to expect volatility. This is the most comfortable way I could imagine. Fed Bostic is saying your CPI report is probably going to be not so good tomorrow, but ultimately you're heading to 2% inflation. Fed Williams said today, there's still some ways to go before hitting the 2% inflation target. Some ways to go doesn't sound great. Whether or not this is a super hot report and the markets sell off, or whether this is hot but not too bad, I think is really the question. Honestly, after hearing what the Fed officials said today, I would be surprised if we get a PCE report that comes in softer than expected. Fed Williams also said, quote, I see a likely uneven path back to 2% inflation. I mean, they're basically telling you tomorrow's report is going to be on the hot side. And you did have the MOC imbalance at 1.2 billion to the sell side. This is the market on close imbalance. That's what MOC stands for, market on close. And it's basically just telling you there was quite a bit of additional selling pressure relative to buying pressure in the last 10 minutes of trading today. So it looks like someone was positioning a little defensively in their portfolios for tomorrow. As Sven Hendricks says on X, 2024, we're just in permanent extreme greed. This is another reason why I do think markets are a little on the vulnerable side here, because 1 month ago, you were at 76 on CNN's Fear and Greed Index. That was considered extreme greed, anything above 75. 1 week ago, you were at 75, extreme greed, and now today you're at 79. Yesterday, you were actually at 77. So the markets just keep getting greedier and greedier and greedier. And honestly, I'm pretty bullish right now, believe that or not. I just think the markets are not priced for any kind of bad news, whether it's stickier inflation, whether it's an economy that starts to turn downwards tilts towards a recession, or if earnings just were to, get worse. I don't think any of these things are priced into equity markets with the S&P where it currently is. So if you don't have any bad news priced into the markets, you're very vulnerable to get shocks if bad news does actually happen. And it doesn't even have to be that bad. I mean, back in 2022, we were so accustomed to bad news and bad data and the world's falling apart. If we were to have gotten, the same, let's say 0.4% PCE report in 2022, we would have rallied off of that. If there, was half of the view as there is today of a soft landing in 2022, we would have soared. But, expectations were very low then. Now they're very high, so we are vulnerable, not just tomorrow, but until we start to get a little bit more negative in the markets. It's actually scary when markets are this bullish, because then hey, how long is this really going to last? And take a look at your earnings today and after hours sharply, bringing down the triple Qs about 0.25%. The NASDAQ down about 0.2% in after hours. Now, Snowflake, they just reported earnings. They're getting a new CEO. They kind of sandbagged on their guidance, which is common. Snowflake is down 21% here in after hours. That's rough for a stock that is considered one of your AI trades. You also had Salesforce that was down about 6% at one point in after hours. They have recovered mainly due to some comments made on the earnings call. They issued their first dividend. They issued a $10 billion share buyback. We'll have to see if this holds. Markets were a lot more red in after hours when Salesforce was down. But really, Snowflake missing in after hours and guiding down, it is putting a little bit of a damper on your semiconductor and your AI trade. Nvidia is down 0.5% here in after hours. ARM is down 1.4% in after hours. And we'll see if that does last tomorrow. It really depends again on your PCE data. Now, according to Bank of America, the S&P 500 is statistically expensive on 19 of 20 different metrics and is trading at a 95th percentile price to trailing earnings ratio based on data back to 1900. So basically here, there's not a lot of valuation support. If the soft landing thesis or rate cut thesis starts to go out the window, in which it's possible it could tomorrow, it doesn't have to happen, but it could start tomorrow, then there's not a lot to really hold this market up. Stocks are pretty expensive here. Unlike when you're in a bear market like 2022, valuations are low, so it's easier for people to stomach buying stocks. I'm really not hearing anyone that is saying you should go out and plow all of your money into the S&P or the triple Q index. Some people are saying small caps look attractive, and I would agree with that. Interest rate sensitive names, if the soft landing thesis is correct, you'd want to own those stocks, right? So buy those stocks now. I understand that logic. I like that trade right now. I like to put my money into catch-up trades, if you will, over the last 3-6 months or so. But I mean, for the broader markets, there's not a lot of valuation support here. And did you see this today? Coinbase stock fell quite a bit today because Coinbase dropped $100 billion of market cap in 15 minutes. That was Bitcoin. Between 12:15 p.m. and 12:30 p.m., Bitcoin fell from 64,000 to 59,000. That is a 9% swing in 15 minutes. That's because many Coinbase users, including myself, well, it began saying there was $0 in your account. So that caused a sell-off in Coinbase. That caused a sell-off in Bitcoin. But yeah, if you were watching that live, that was a huge swing. Now check this out from the car dealership guide. The first pre-owned Tesla Cybertruck has sold at auction. The price, a whopping $244,000. I wonder what the buyer will price it at. And here you can see $244,000 bid. And I believe if you look closely, there was like 600 bids. I don't know where I seen that before, but quite a few bids that were actually put on this Cybertruck. In some other disappointing news for Tesla, Peter Blades, Tesla's creative design lead, has left the company. He was creative design lead for the Model Y from November 2018 to last month, the Roadster from March 2017 to last month, and the Semi from September 2016 to March of 2017, as well as the principal design lead on the Model 3 from December 2014 to February 2017. Tesla's fleet of 5.5 million vehicles drives an average 1,667 miles per second. That's over 52 billion miles per year and growing. And Tesla does deliver about 5,200 vehicles every single day on average. So again, there is no real question to why Apple is doing away with the Apple car. Apple realizes that they cannot compete with that kind of mileage and data that Tesla has for autonomous vehicles. Tim Cook, back in 2017, says the Apple car is really just the software that they care about. The autonomy of the car is where the real value is. Now, Tim Cook said that is the mother of all AI projects, and it's a very challenging one at that. And he said this back in 2017 before AI was cool to talk about. And we just see they gave up on that idea because, I mean, by the time Apple actually gets a car out on the roads, Tesla's likely to have a robo-taxi service. And then by then, you're not even going to be able to compete for a very, 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 very long time on any kind of autonomous driving software. Like, there is no competing with Tesla at this point. The question is not, you know, who gets a robo-taxi network first? It is, when does Tesla get the robo-taxi network? When are they operational? Not, is Google going to come, you know, steal that title with Waymo? Or is Apple going to come, you know, develop some kind of fully autonomous software before Tesla? That's not even a question at this point. Now, in regards to Tesla stock, Tesla's currently trading at $201.10 per share. The technicals look good. You're riding this uptrending line of support. All is well there. You're in the middle of this gap in which you gapped down last earnings. This gap is really at about 207, but I think 210 is really truly filling that gap, because then you fill this prior gap as well back here in this area. So I think 207, 210, that's the real level that I would be targeting tomorrow if PCE does come in better than expected. 0.3% month over month or 0.2% month over month. If we get 0.4%, I'm not expecting some kind of 2 or 3% sell-off like day, but I am expecting a half of 1%, maybe 1% sell-off in the indexes, and that would drive Tesla down quite a bit. That would drive the broader kind of Russell down, your interest rate sensitive names, and you probably get a clustering into your big tech, a narrowing again of our markets. But so far, the picture actually looks really good for Tesla. You do have an RSI of 52.41, which is neutral, and you do have a MACD that is on a very healthy uptrend, looking to go positive here soon, and that would likely pull a lot more buyers into the stock. Now, if you really come in better than expectations on PCE, that could be a defining moment for your small cap interest rate sensitive trade for a stock like Tesla. And I would expect this could actually start a multi-week rally for this area of the markets, especially since you've gotten more people talking about this area of the markets. Okay. And, you know, to the contrary, if you get a really bad PC number, this could start a multi-week kind of correction event in our markets. So I do think tomorrow is epically important, and I think the markets have been waiting for this for the last 2 or 3 days or so. Markets S&P on the headline really hasn't done much over the past couple of days, really just trading sideways. Even though we've gotten data that has come out, it just hasn't caused a move in our markets, at least not yet. But I think that does change tomorrow. Here on the day today, you did have quite a bit of hedge fund and institutional option activity in Tesla stock. You had 824 orders totaling $487 million with a positive order value of 51%. If you include retail in that, you had volume to the call side of 58.3% and volume to the put side of 41.7%. That is going to go ahead and do it for this video. Hit that like button as well as subscribe to the channel. Let me know your thoughts and expectations around tomorrow's PCE report, and what do you think is going to happen to our markets? Thank you for watching. If you guys want to come trade with us, check out that link down below in the description of this video. You have a great rest of your day, and I will see you in the next one.